Hello YouTube, hello Internet, it's Irish Guy here. I wanted to talk about why I've decided to boycott 000 stocks. Now, 000 stock is simply a stock that's priced .0001 through .0009. Now, a lot of people, especially people that are new to the stock market, new to penny stocks, they don't understand why people don't like those cheap plays. They're like, well, if they're this cheap, I can get in at a bargain basement price, and I can ride it up to a few pennies and have phenomenal percentage gains. What people don't realize is that these 000 plays, if you look at the share structure, now share structure is ultimately what enables a stock to move. So when you're dealing with these 000 plays, the share structure, the authorized shares, is usually 6 billion shares or more. The float, now float is simply outstanding shares, and then you subtract the restricted shares, so the shares that are not publicly traded, and you get the float. And float for 000, a stock price in the 000 range is usually in the billions as well. So what that means is that if people purchase these stocks, now sure they can get for $100 before commission, you can get 1 million shares at 0001. Now, is that going to go anywhere? Well, if it's got poor share structure, probably not. But even with poor share structure, if the news is phenomenal enough, it could move. It could appreciate over time, but probably not too rapidly. Because for those 000 plays that are diluted, that have poor share structure, they take billions of volume to uptick. And even when all that volume's coming in, you got your flippers. So you got the people that are, if these 000 plays do uptick, as soon as they uptick, you got flippers trying to make a very large and quick percentage gain. So are they something that are going to usually go up rapidly? No. And if they do go up rapidly, I mean it's definitely a rarity. There are some 000 plays that I'm aware of that have run from 000 2 or 000 3 all the way to about 30 cents or so. Now that's a rare occasion. What I recommend, and this is just something I've been doing, and it's provided some very phenomenal percentage increases for me for 2012. I've been doing 002s, so stocks that are priced in the well, not just 002s, but I've been doing anything from the upper 001 range to about 003. So what I'll do every day, I'll go to otcmarkets.com because that's a screener that I like. It's a free screener, and I'll put in their price per share. I'll put in like 0015 through 003, and then I'll sort by volume active. So what I'm doing, I'm looking for stocks that are below half a cent, and the volume indicating they have buying interest. Because a lot of people will go out there and be like, oh, I'm just going to buy this stock and I'm going to sit on it because I know news is coming in the future. But what they don't realize is that news probably won't come, and if it does, they likely would have waited so long for the news that the stocks probably downticked a little bit because people lost interest. They were tired of waiting and they wanted to put their money elsewhere. And then if the news does release, it may be negative, and then the stock just bottoms out. Or hey, it's positive news and their patience paid off. But by playing these double upper 001 plays through 003, and of course I sort them by using OTC markets. I sort by that price. I sort by volume actives, and then I look at the share structure. I'm not interested in anything that has a billion or more outstanding shares. So I check that out. If all of that checks out with the share structure, then I'll go into the forums and I'll say, what's driving this volume? And I'll get a quick feel for what's going on. Now at this point in time, because these things move so rapidly, the ones that have good share structure, the stock may already be up 30 or 40%. Does that mean I don't want to enter? No. I've had a lot of success throughout this year getting in on plays that are already up 30 or 40%, and I've stayed in on the ride for another 100, 150, 200%, and that's it feels really good. Now it's what's funny about these is that you get into this rhythm, and it's like, wow, I'm making this percentage increase every day, but then you look back and it's like, well, God, that one that I got in on at 002, if I'd held it for a few days, it went to almost 2 cents. And I actually had one that I played a few weeks ago, actually, that did that, and I'd gotten out for a phenomenal percentage gain, but it was like, well, God, if I'd held that, I could have really had even a more phenomenal percentage gain. But it's one of those things, if you're playing these 002s and you're concerned with the momentum, the news, and all of the hype that's being pumped. It's like, oh, they're going to do this, and then this is next, and this is next. If you want to buy and hold, that's fine. But from what I've found, and this is just my own, I mean, everybody's got their own penny stock philosophy. But what I've found this year is that getting in after a run has started, after there's volume, and getting in on that, just riding it up for a few hours, making a nice percentage increase, and then putting in a limit order and cashing out on that position, doing that repeatedly is more than likely going to yield better profits than sitting on a stock for a few days, a few weeks, a few months with little or no increase in price per share. More than likely it's going to decrease. So you can make a lot of quick percentage gains as opposed to one big kahuna that you wait and see what's going to happen. Now, the good thing about these quick double zero range plays that I've started playing with is that if they do turn in the other direction, it's a situation where if you have enough of them to where you've made phenomenal percentage increases, and then you've got one that disappoints as soon as you get in. I mean, it starts going down. It's down 15, 20% or whatever. Should you hold it and ride it out to the bottom? Well, sometimes these things are flipped back and forth. So just because it goes down a considerable amount of a considerable percentage doesn't mean it's going to quickly rebound. So what I usually do, though, I'll put in a stop limit order. So it'll stop if it goes down to below my purchase price, and it just depends on how well I've done with the other plays in any given day of trading. But whatever my threshold for loss is, because ultimately I want to be well in the green at the end of every day. So I'll put in a stop limit order, and then when it hits a stop, then the limit sell order will execute, and hopefully fill my order completely, rather. So that's a good exit strategy. I've only had one in the well, fortunately, and I don't want to jinx myself, I only had one in 2012 that I had to take a loss on, but the loss was very easily outshined by the phenomenal percentage increase for the other plays. So keep that in mind. It's just a good strategy. I like it. I know everybody's got their own strategy, and people may think that mine's crazy and it's too volatile. Well, it is. But with the volatility comes the possibility of making even more phenomenal percentage gains. Thanks for tuning in, and feel free to check out all my other videos on YouTube too. And thanks for all the feedback and support. I know a lot of you probably watched my How to Play Penny Stocks video, the PowerPoint presentation, and appreciate all the views there. And have a good one, and thanks for tuning in.